Hey, Arsen, how you doing?
I'm good, Peter. How you doing?
Good. I'm in Canada this time. You're in Europe, and we have some big news. What's going on?
So the moment has come. We're uplisting on AIM.
Nice. All right. Amazing. So what does that mean? Why AIM? Why now?
So it's a big moment. It's a fantastic day for the company, the entire Tap team, our partners, and our shareholders. So why now? Simply because the business is ready. We've built a strong product. We've built in the foundation that we need. We've proven our model. So moving to AIM was just a simple, logical step. It's the world's most successful growth market, and it provides the right platform for the company for its ambitions.
And why, like why now? Like why is this the right time to move to AIM in June of 2025?
So that's a good question. It pretty much unlocks our next phase of growth. The move reflects the growing needs of the business. Now, AIM, for example, provides a deeper pool of capital, but it also provides a deeper liquidity for our shareholders.
I'm happy to jump in as well, Arsen. So the other thing about AIM is that institutional investors are a lot more comfortable on AIM than on some of the junior markets. Aquis is a great launch pad for companies, and um, it has a good exposure to certain retail investors, et cetera. But a lot of people are still unfamiliar with it, and particularly institutions. You and I were in London back in January, and we did a roadshow, and we met with quite a few institutional investors. And what was some of the feedback that we got at that time on that roadshow?
The messaging was consistent across all the institution investors that we met. It was, we have a great product, we've got great numbers, we've got a great story. But the limitation was their mandates that they had, that Aquis wasn't something that they could invest in. And that pretty much, we took on that feedback and we decided to take ahead and tackle that issue, which is why we started the process of uplisting on AIM.
Yeah, and I would add to that, we've also been working with some great advisors. Obviously, in the announcement that we've put out, you'll see that Spark is the advisor that's taken us through this process, and they are very well positioned in London. They've done this with a bunch of companies, and they're well positioned. They're going to be our nomad, which is what you need when you're on AIM. And we think that they're a great partner, for us to grow with. We're going to stay with Tennyson as our corporate broker, and they're great at raising money, and they know this space probably better than anyone in London. So we're really happy with our advisors that we have moving forward as well, and that's part of this. So it sort of begs the question: why not NASDAQ? Why or another exchange? Why is AIM the right strategic fit for the company at this particular moment?
So, as a CEO of a tech company, obviously NASDAQ is the North Star. We want to end up listing on NASDAQ, but you already kind of know what has to be done in order to be a NASDAQ listed company. So, I think people would also like to hear from you why we didn't do that move.
Yeah, listen, the Nasdaq process is a beast. It's very expensive. You're competing against a ton of other companies, and we're not ready for it yet in the growth of where the company is. It doesn't mean that we don't want to get there. That AIM isn't a nice stepping stone to get there, but in the short and medium term, Nasdaq just absolutely doesn't make any sense right now for us. We don't have enough exposure. We don't have enough, enough of a market cap, et cetera, et cetera. So it's a nice, as you said, I like that. It's a nice North Star, but we're not ready for it yet. I mean, with Argo, we spent millions of dollars just with our U.S. lawyers, getting that listing done, and it's a really heavy lift. The AIM lift is a much smaller, more achievable lift in the short term, and we thought that was a good stepping stone. And again, it goes back to those meetings that we had in January and the feedback we got with institutional investors in the UK, which is, we like what you're doing. We like that this is a platform that has real revenue, that has a real growth opportunity, has a growth story, and that is kind of poised to be around for a long time. We're not, going to be just a flash in the pan that is going to be here. We're actually trying to build a strong foundation to continue to grow for a long time, and be a brand that's around that people know. Which kind of leads me to the next question, which is, there's a whole bunch of other companies out there right now who are doing, what they're called Bitcoin strategic reserve companies, led by Smarter Web Co. Why has Tap decided to not pursue that direction and announce a Bitcoin strategic reserve as part of the company?
I mean, majority of the companies that have taken over this treasury plan, buying Bitcoin, raising more capital, buying Bitcoin, eventually what they do is they just attach pretty much the value of the Bitcoin to their company. If Bitcoin goes up, perfect. Yeah, they'll be valued higher. If Bitcoin price goes down, they've got nothing else to back up the company with because they don't have any operations. So we've got a proper business model. We generate fees. We have trading users. We've almost reached 400,000 active users or not registered users. And it just simply doesn't make sense for us to shift away from the ethos that we have, which is build a good product. So our priority is build a sustainable model for growth. That's what we're trying to do. Don't you think it's the right approach?
Yeah, I think absolutely it's the right approach. Listen, I've lived that roller coaster before. I've been seen as a proxy for Bitcoin, et cetera, et cetera. And it's exciting, and it's, you've seen what's happened with SWC, their valuation's gone up, et cetera. It's just not the path for us. And I think Arsen, it's a testament to your vision initially was you wanted to build a real product to solve a real problem, which is there is a lot of friction between the traditional world of banking and the world of crypto exchanges and buying, selling, trading crypto. Like that's just a real problem for a lot of people. And that problem persists, and Tap solves that problem. And so that's what we need to remain focused on. So let's kind of go into that a little bit. It's looking like a banner year for us. Our end of fiscal is coming up June 30th. It looks like, one of the best years or the best year we've ever had in terms of revenue. That's awesome. What are we looking at in terms of products down the line? How are we improving the product for users, and what can people get excited about coming up in the weeks and months ahead?
So I don't want to jump the gun and release any features or products that we've been working on behind the scenes. But what I can talk about is over the past 8, 9 months, we've been rebuilding Tap from the ground up, and that has to do mostly with growth. So over the past few years, we've seen bottlenecks as we get more users in, especially when they come simultaneously. And that limited the ability for our users to use the product. So we decided to scrap everything, every bit of code that we had, and rebuild completely from scratch. And that has been live for about a month and a half. We are still doing internal testing. Stage one, it's pretty much only on production, but for employees and internal beta testers. As we make sure that the product that we've designed is completely stable, then we'll start moving our user base into the new production environment, which means no downtimes or very limited downtimes, faster execution for trading, and as well responsiveness of the product. And that's also the stepping stone for growth. That's one. And now, in terms of other products that we want to roll out, I'll just say stay tuned.
Okay, exciting. So you're feeling how are you feeling? So this is kind of the next obvious question, which is you're coming up on a year of being the CEO at Tap, right? That you took over officially in July. What was the takeover?
I think August, if I'm not mistaken.
Okay.
But yeah, let's say summer.
Okay. So it's the summer roughly of last year you took over CEO. It's now been roughly a year. What have you learned as CEO, and how is Tap different as with you at the helm being the CEO than it was previously?
So the biggest lesson is, well, I would say it's two-faced. Is one, it's sometimes ignore the noise. And it goes back to what we discussed earlier. For example, as a CEO of a publicly listed company, everyone will talk about the share price. Why aren't you doing a Bitcoin treasury? So one, learn to tone down the outside voices. But two is delegating. It's nice to have a CEO at the helm and making sure that the ship goes the right way. But it's also nice when that CEO is not doing everything involved, which is why over the past few months, we've been delegating work internally. We've got a very flat structure where everyone has access to everyone. We've got direct reports to me, and I've got access to pretty much every element of the business. And it's nice to see the company operate in such an effective manner.
Yeah, that's awesome. I mean, I've been around now over 6 months. This is, I think, my seventh month as chairman, but I was involved with, you as an advisor for a few months before that. And I certainly have seen that growth in you as a CEO, being more comfortable delegating, um, being more comfortable sort of building your team. And we've made some internal adjustments with team members and I think that's been really good for the company, and it's been good for you to have a bigger picture of things as opposed to being in the weeds. I mean, it's still a small team, and so there's still lots of crossover and people doing uh, you know multiple things in multiple parts of the company. But that's been great. And then absolutely on the noise piece, I mean, yeah, as a small cap company in London, there's a lot of chatter out there. And it's good to get feedback for sure. And it's good to not be closed off to feedback. And we have advisors and we have, you know, shareholders and we take on input. I would say I've seen you take on input, but at the same time, we have to keep our eye on the prize, which is driving growth and revenue through adding users and improving the product. It's really that simple. Um, and that's why I joined up as chairman, because I think again, going back, there's a real product that is solving a real problem. And we need to just keep focused on that and keep, building off of that. Um, so on that point around engagement, uh, one of the pieces of feedback that we've received in the last 3 to 6 months has been, we'd like to see more engagement from the company. We've done some of these podcasts. We've done some engagement. How are we planning to stay connected now that we're on AIM with institutional and retail investors?
So, given being on AIM, it brings more responsibility to us to have more visibility and communication with our shareholders. And what everyone should expect from us and hear from us is we're planning to do more regular content. We're also planning to do more interviews like this one. And in particular, we're keen as well to set up more interactive Q&As where we'll allow shareholders to just simply ask us anything.
Yeah, at Argo, we did those investor meet platform conversations, investor calls, and those are great. Those are it's a good platform. So we're going to do some of those in the future. So stay tuned for an announcement with that. Because it's great to get questions and get feedback and be engaged, while at the same time for us to be focused on what the company is doing on a day-to-day, week-to-week basis. Okay, I have a few other questions here. Let me just see what we got. So what excites you most about this next chapter for Tap, both personally and professionally?
So obviously listing on a bigger exchange, that's a massive milestone personally, but also professionally. And then as well, taking over as a CEO has taught me quite a few things over the past 12 months. So obviously I'm putting everything into practice and making the product better, making the company better. And at the end of the day as well, getting a return to our shareholders. That's what we are here for.
Yeah, I mean, when I think about my first year as CEO at Argo, I was just figuring things out. Like, you need 12 months in the role, and most people who, when you take over the role, most people they're like, okay, it's gonna take 6 to 12 months to figure it out. They give you that time. So I think you are figuring it out and are very close to being like more mature in the role as the CEO than you were 12 months ago, certainly. Um, and so I'm excited for the next 12 months because I think the company has a really great opportunity to grow, to increase revenue, to have a bigger impact in the space. So that's exciting. A question about raising. So often when companies uplist or move to a new exchange, they do it alongside a fundraise. Tap is not doing a fundraise with this uplist. Is there a fundraise in the near future? How important is access to capital as part of the reason to uplist to AIM?
There is positives by not raising capital right now. The good thing is that we don't need it. It's plain and simple. But I think you're the most fit person to answer that question, given you've raised hundreds of millions of dollars.
Sure. Yeah, no, I'm happy to weigh in. So, what I would say is you always want to be on the best exchange to give yourself the best opportunity to raise capital when the time is right. So, you never say, well, we're never going to raise capital, because part of being on the public markets is when you need to raise capital, you do, and you make sure that it aligns with shareholder interests and stakeholder interests. And that's the way you drive growth. Because sometimes, for instance, if we were going to launch a massive marketing campaign, in the future, we would need we would need to raise funds for that, because we don't have the cash flow to do that. So I think the answer is, and it's kind of a stock answer, it's a boring answer, but it's true, which is we'll raise capital when and if needed, at the company's discretion, based on the interests of the company. And that's why you're a listed company. It's part of the reason. I think it's that simple. Always keeping in mind dilution and concern for, making sure that shareholders are treated right. Okay. So what else have we got? What does success look like over the next 12 months? What should investors be watching for?
First, a smooth transition to AIM, showing our new investors that we can deliver, and then executing on our product roadmap. Those are the two main things that we want to achieve.
And what is the biggest challenge to achieve those? And what is the reason why the company, in your view, will achieve those?
I think a balance. There's a lot of things that we want to do, but everything that we want to do costs a bit of money. So it's always the juggle between cash flow and spending something for a new feature or a new build or a new product or a new setup fee. So that's the main issue.
I have a question, Arsen, about for a lot of small companies, they spend a lot of their time firefighting. What is the balance for you between firefighting and strategic planning and growth? How do you make sure that you're doing both of those at the same time?
So the good thing is, because we've spent so much time now on building our foundation, firefighting has become less and less of an occurrence. And that gives us the ability to focus as a company and obviously as a CEO into our long-term growth. So we would say firefighting now has become a history for the company. Yeah, there is always something that comes up in the payment space or in the crypto space. There's a token that has done something wrong or a payments company that has gone bad. But other than that, what we've done is we created redundancies, we've improved our tech, and now that gives us the ability to focus on the future. And that's where our focus is right now.
Okay, Arsen, this has been fun. Any final thoughts for current investors and for future investors?
So for our current investors, I would like to say thank you. Thank you for being with us throughout this journey. I know it hasn't been easy and we've had our ups and downs. And in terms of our future investors, this is a pivotal moment for this company. We're ready to take over the space. We're creating new product. So if you're looking for a replacement for your Revoluts, your Monzos, and your Starlings, here we are.
Awesome. All right. So if people want to learn more about Tap, they can go to our website withtap.com, and of course follow us on X. What's our X handle?
It's at Tap FinTech.
All right. There we go. Okay, Arsen, this is always fun. Good to see you.
Good to see you as well, Peter.